You read that right. After a final rebalancing pass in my portfolio this past Monday, March 2nd, all the single stocks in my portfolio are gone now across both my growth and high yield income side of the portfolio. We'll dive into all the reasons why in today's video. As always, you'll get radical transparency on my channel. I share my real numbers and you see exactly how much skin I have in the game with any given position. You can follow along my portfolio by checking the free Snowball portfolio link in the description below. And if you appreciate all this transparency, make sure to give a like and subscribe if you want to keep seeing more of this content. Before we get started, just the usual disclaimer and a refresher for people. So this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. Also, here's a refresher for anyone that's new to the channel. So typically this is the monthly flow that I would be using if I still have my job. But as you probably saw the other week, I got laid off. So this is the old chart that I was using. I haven't had a chance to update it this week yet. But for now, yeah, I invest 100% of my income. So I used to do it with 10.8K every month for my paycheck, but now that'll be closer to 4.4K every month for the next 6 months with my unemployment income. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. And the goal is to ideally never sell a share and to never take out money out of the account apart from kind of rebalancing. Ideally, I want to forever compound my growth and high yield assets and have my monthly dividends eventually exceed my monthly expenses. For an in-depth breakdown video of the chart, check out the link at the top right. And let's get started. If we pop over to Robinhood, we can kind of see the portfolio here. So, of course, today was a pretty decent red day, just with like the perspective of the war in Iran potentially just lasting way longer than they are saying. So yeah, yesterday was a green day, weirdly, with everything, thinking that I guess it would last shorter than it was. And then today kind of just flipped the other way. So, yeah, pretty bad red day for my portfolio, down 3%. Then really this is amplified twice, right? By margin, just because of, how much margin I'm using here, right? So nearly half the portfolio in it. So yeah, something to keep in mind there, that gets amplified by quite a bit. So really, probably realistically, if I just count without the margin, I'm down 1.5%, but that gets basically doubled, right? But yeah, this is better than it was in the middle of the day. Like, yeah, and this morning I was down all the way down to 5.85%, like down 9.5K in a day. But it kind of like bounced back in the latter half of the day. So actually ended a little bit greener than where the day started, actually, which was good in the end, and a little bit of a bounce after hours. But yeah, most everything was red when you look at that stuff, right? There's only MLPI, and this bounce only happened after hours for energy stuff. That's green. Gold got hit pretty hard today too, so much for that hedge. Yeah, you can kind of see there. And yeah, you might notice too that like the portfolio is a little bit different. There's maybe some missing holdings there. So yeah, we'll kind of just dive in here. So if we pop over to the portfolio, you'll see that it's a lot lighter. So you'll notice that all my single stocks are gone, right? So TTWO is gone, Hood is gone. You'll notice that GOOW is gone on the high yield side, and you'll notice that NVDY is gone on the high yield side. So basically, at this point, like apart from BTCI, if you want to call that kind of like a single stock, given that it's just one asset, all my single stocks are gone. Everything is now either indexed or in like a basket of stocks within like a sector ETF and whatnot, or like one of these hedge fund type long short ones like ORR or CLSC. So dive right into it. So pop over back to Miro here. So I just kind of screen capped just a post that I posted in the Trade Alerts channel on Discord. So yeah, you saw like all these rebalances that I did last week. And then yeah, I mean, at the end, as I thought about it over the weekend and over the last couple days, at the end of the day, I just wanted to kind of get rid of all my single stocks given the layoff. And yeah, and really it's not a knock on Hood, TTWO, Google, or NVIDIA really. Like I honestly still very much believe in them, and I'd still be invested in them honestly if it weren't for the layoffs. So yeah, ultimately I just wanted to reduce my overall volatility and beta in the portfolio, and I felt like that took precedence over kind of being bullish on these stocks. yeah, just because like a single stock can just move a lot more like on an earnings day or a weird day, right? Like, I mean, Hood yesterday was up big, like 5%, but then today was down like another 5%, right? So it's like there's just like big swings that I kind of just wanted to reduce overall. And yeah, so let's go over all the changes. So I got rid of all the single stocks. I definitely realized a lot more losses with these today, so yeah, I'll go over that towards the end. But like, yeah, as I mentioned with the last rebalance, my thinking with that is that I'll just use that over the next several years, honestly, anytime I need to offset any gains. So anything that I sell for a gain from now on, they'll basically be offset by this kind of carryover loss that I have, right? So that'll just kind of keep carrying over until I deplete it completely. Like even like back in 2022, I realized like a loss of like 16K when I bought my house and had to like take money out of my stock account. So I'm actually still using that carryover loss to this day. I think actually with this next tax appointment, I should be able to kind of wipe out most of it because I realized a lot of gains last year when I was kind of rebalancing out of Apple and Microsoft. So I think that actually should cover most of my my carryover that I have from that year. So this will basically kind of replenish that cup, and then I can use that for future years, right? And yeah, so on the growth side here, so I basically sold Take Two for 3.6K essentially, and I sold that for $309 or 7.74% loss. I sold Hood for 5.2K, and that was for a 1.5K or 23% loss. So yeah, realized like, yeah, just a little over $1,900 there. And yeah, and then I replaced that by VGT essentially. So yeah, I already have QQQM in my portfolio and SPMO as far as kind of like more tech oriented plays. And yeah, so SPMO is a little bit more balanced where it's a little lighter on tech and like heavier on like stuff like finances and things like that. And QQQM has both kind of more pure tech plays and then also like more software stuff like Facebook, Amazon, and things like that. VGT is more of a pure tech play. So like say things like Facebook and Amazon and whatnot are not in there. This is just kind of more hardware oriented stuff. So putting it there just to have like and this is like generally the better performing than like QQQM, SPMO or whatnot. So it's a little bit more high volatility compared to those, but it's a lot less volatile than like these two combined, right? And yeah, we can actually, we'll go over that in Testfolio later. So yeah, obviously Hood had like a big run up last year. So that's why this would be ahead had I been invested in it since 2021, which I wasn't. Yeah, like really, I just got into it. Like if we go off 2025, really, yeah, had I got it earlier in the year in 2025, I'd be ahead, but I didn't quite get there. I think in Hood, I got in it like somewhere in the middle of the year, a little bit later. So, but if we put it year to date, just from like 2026, can kind of see where stuff is headed, right? So like T2 and Hood have a beta of like 2.83, which is pretty high, just very volatile, like 55% volatility here. And then by switching to VGT, that's kind of closer to like a 177 beta or 22.92%. So definitely still a lot more volatile than the S&P for sure. But yeah, I do believe in tech in the long term, and I think that's just like a good holding to have there. Good step down there, both from beta and volatility there. So that's for the growth side. And on the high yield side, so really this one was partly OCD brain, wanting to get rid of my 30% MMR in there, but also again there just to kind of get rid of single stock risk. So I sold GOW for 2.15K. So that was just a small $33 loss or 1.54%. But really, if you factor in the dividends and the total returns that I've gotten, that was actually up $170 or 7.79%. So with that, I actually bought SPYI for 2.1K. I just threw in a couple dollars there to kind of match my earnings from YouTube. So because this will be basically my new position for my YouTube earnings. So any new YouTube earnings that I get, whether from YouTube, from Gumroad, from Snowball referrals, I'll just throw into SPYI for now. So yeah, we'll just kind of keep basically my YouTube earnings will just kind of keep paying me, which is great. I love that idea given the channel. And then also the big one that I sold was NVDY. So yeah, still very bullish on NVIDIA, and that's why like I hold CHPY now too instead. But there was kind of a lot of overlap between CHPY and NVIDIA. So basically what I did is I sold NVIDIA for 22.5K. So that's realizing a pretty massive 9K loss or a 28.69% loss. But really, if you factor in all the dividends I've gotten, like I've actually held this the longest out of all my high yield stuff. And yeah, with all the dividends factored in, like that was actually a 10.9K gain or 34.53% gain if you factor in the total return. So overall in the green for that as far as sales. And then spicily, I bought a tiny bit of ULTY extra. So for 2.5K of ULTY with that extra that I had on top of the 20K. And then I bought another 20K into CHPY just because like, yeah, CHPY has an NVDY already in it anyways. And as I mentioned in a video the other day, yeah, as I've researched CHPY more, yeah, definitely liking it. Yeah, I know it's like still yield max and everything, but it's performed well. And I think the key thing that I do like here compared to the others is that they actually do hold the underlyings and then actually sell like covered call debit spreads, I believe, on top of them to kind of generate that 40% income that it's getting. Yeah, I think that's probably helped kind of factor in why it's outperformed as much as it has. So NVIDIA has a large portion of this, really. But a lot of other semiconductor companies there. And so, yeah, bought 20K of that. As far as CHPY versus NVIDY, you can kind of see here on Testfolio. So, yeah, the beta for CHPY is actually a little bit higher compared to NVIDY, surprisingly. But its volatility is slightly lower. So this is like since it came out in April of last year. But yeah, you can kind of see that this is without total returns factored in, so no dividends. Like you can kind of see how NVIDY is kind of just gradually going down given its high yield, but for CHPY here, I think because it's holding the underlyings, like this is holding up a lot better and actually NAV appreciating, which is nice. And then if we switch it to like year to date, you can kind of see a little bit of a different picture here where NVIDIA has been kind of slowly grinding down and then CHPY has been kind of slowly going up and staying relatively stable. And its beta has actually been lower this year, and then NVIDIA's has been higher, and its volatility a lot lower compared to NVIDIA. So this is ultimately like, yeah, big reason why I wanted to roll NVIDIA into CHPY essentially. So all in, like really, yesterday I basically realized losses of like 11K roughly. And then so if you factor in all my year-to-date balancing and kind of sells that I've made so far this year, like that's adding up to a 21.5K loss. So quite a bit. So yeah, it's a lot of losses that I'll be carrying over for the next several years, most likely. We'll see if I ever have to realize 21K of gains in a year to kind of wipe this out and kind of get those for tax-free. But yeah, that's the plan there. And like, as far as like how the tax carryover stuff works. So like right now, so let's say I have like 21K, right, of losses. So say 1 year I get like, I don't know, say at the end of this year, I have like 10K of gains, right? These gains end up being like tax-free. And then after that makes it so that my losses here is actually more like 11K of losses. And then at the end of the year, what happens is that up to 3K, like if you're filing single, up to 3K of these can be used to offset any ordinary income, or just say any sort of dividend income there. So that would kind of push this down to like K, right? And then this would kind of carry over to future tax years, right? That's how I understand it. I believe how it works from my research. I'm definitely going to be double checking this with my tax person later this month, really. But that's how I'll be kind of carrying over those gains. But like, yeah, like I mentioned last year, for example, like I realized a lot of gains. I think I had like over 9K in gains realized last year, but I also had like 9K of carryover loss from previous years that I can still use, right? So basically the 9K in gains that I realized last year should be tax-free given that. So because of these losses. So that's the idea there, where you can kind of offset those gains with losses, right? But yeah, that's how things are. Yeah, and with all that, so if we check the portfolio here, yeah, you can kind of see that like my margin and margin total kind of stayed relatively the same because I'm just kind of playing with the same money there. My blended margin maintenance is down to exactly 25% now because literally all my holdings now are 25%, which is great. Yeah, the only ones that I'd say are at risk to potentially kind of go up again, maybe only temporarily, is like ULTY potentially if there's ever a reverse split, or like probably YMAX actually is kind of getting pretty close to reverse split territory here at 853. But its new strategy is kind of being put in place now, so I'm curious how that's going to perform. But yeah, that makes it so that my buffer is as big as it can be, and it's not being affected so much by the margin maintenance here. So this buffer is staying like relatively healthy at 78.2K. So that makes it so that I have a overall margin buffer for the net portfolio of 49.53%, and that's if you go off this net portfolio value. And then for the gross portfolio value, like this, if it drops 24.53%, that would be the equivalent of this drop on the net portfolio value, right? And right now, after today's dip too, I've dipped just under 50% equity, unfortunately. This was kind of to be expected, as I mentioned. And yeah, this is kind of going to get a little bit worse as I keep drawing bills every week, but hopefully it should be replenished a little bit through my unemployment payments and then also my dividends that come in. So speaking of dividends, with all those rebalancing changes, it has dipped this a little bit. So I think last time we showed this, it was like a little above 4.4K. So now I'm just under that. But yeah, I'm hoping after I get my unemployment payment this week and also my severance pay, this will push back up to past 4.4K. Overall, though, still makes for a solid distribution yield, 35.38% if you factor in just the high yield assets in the portfolio. But if you count the full portfolio value, it's actually 17.22% here. Still decent yield overall, even despite all those rebalances and kind of getting out of the crazy higher yield names like Misty and things like that. But yeah, overall, I feel a lot better about the portfolio going into the layoff now. Like, I think like I just have to worry less about like just any specific company swings anymore and just worry more about the overall market. Like right now, it's obviously the war in Iran stuff is kind of swinging the market, but at least, yeah, that's going to swing more like indexes and basket of stocks versus specific companies that I'm holding. So I think that will just kind of give me a lot more peace of mind. And then like I've mentioned as well too, once I do get a new job, I'll probably start kind of scaling back into some single stock names again. Yeah, because like I said, it's not because I don't believe in those stock names. It's really just that it's just a lot more volatile than I want right now, given the layoff. So that's where stuff is at. Full transparency as usual. You can kind of see all my numbers there. And yeah, and I mean also, of course, I'd be remiss to say that like I do have a little bit of regrets from like being impatient yesterday and kind of like buying in right after I sold everything. So I felt good about where I sold yesterday, because yesterday was actually like a kind of like a solid green day. So everything was practically in the green that I sold that day, which was nice. But then I went in right away and just bought everything, as you kind of saw, right? Like I bought all that, basically the 30K worth of stuff. So yeah, ideally, one day I'll probably learn this lesson. Like I learned it for when I DCA'd into SPMO, but then I was impatient with this one. Maybe third time's a charm where I'll learn it. But second time I made this mistake. The first time with WPay back in October with my bonus. But yeah, obviously it was a very red day today in the market when you kind of look at everything. So yeah, like I probably could have gotten CHPY for a lot cheaper, right? I could have gotten VGT for a lot cheaper. Another lesson for next time, just DCA, no matter the impatience that you get. Yeah, I could have probably done it over the next week, really, or the next couple days at least, just to kind of even things out, given the volatility being introduced by the war. So yeah, we'll keep that in mind for next time. But yeah, that's the video. Just wanted to kind of go over that. Just show full transparency wise, like how I'm kind of really adjusting the portfolio post layoff. I think this should be the last of the adjustments, hopefully, that I'm doing to the portfolio. Like from this point on, I'll just be investing honestly, mostly just into the high yield stuff with my unemployment income that's coming in. So yeah, just because I want to keep the monthly cash flow going at this point, given the layoff. So we'll just be investing in high yield stuff for now. Growth stuff, I'll just kind of let these kind of sit and grow as they need. And then once I get a job again, I'll kind of go back to like the original split that I had, as far as kind of like the roughly 60-40, right? So when I was doing like 4K into growth and 6.8K into high yield income. So now it'll be kind of 4.4K going into the high yield income here. So yeah, that's where we're at. As far as the next video, I'm still waiting on next week's this week's unemployment check rather. There's a bit of delay given that I reported last week's estimated YouTube income as we're supposed to. They need to research it more properly, quote unquote. So yeah, hopefully it's not too delayed and I still get it this week. But I should also kind of be getting my measly 7-day severance pay sometime this week as well too. Yeah, we were notified last week. I'll be getting it this week. I don't know when, hopefully before the end of the week. And yeah, and then I'll as I said, I'll be investing both of those fully into the portfolio, right? It's probably looking like I'll probably do XPay this week is my thinking. I'll just put everything in there. So I'll get 1.1K from unemployment, and then I don't know after taxes what I'll be getting from the severance pay, but 7 days worth. So I don't know, might be like 2-3K or something like that after taxes. So we'll likely put it in XPay. I wanted to put it in TSPY this week, but then the payout is actually tomorrow. So probably going to be an XPay, since XPay's payout is going to be next week, and that'll be kind of like a nice 20% yield on that, and on just investing in the S&P, right? So I'm already at like roughly a $720 a monthly income for that, so we'll push that up further. But yeah, that's the update. So I'll catch you in that next video when my unemployment income comes out. And yeah, as usual, if you want to follow me off YouTube, there's a bunch of different ways of doing it. You can do it on Blossom Social here, post all my updates, all my trades. You can kind of follow along there. You can also follow my Snowball portfolio, as I mentioned. So there's a free link for this in the description below. You'll see my full portfolio there, everything that's in the green, everything that's in the red. Yeah, you'll see all my categories and how everything's split up, right? Between like the high yield stuff and my hedges, and then also my growth and anchor ETFs. And then also there's the Patreon if you want to follow there. I have my full backlog of videos here. This is just in case there's any more shenanigans on YouTube. It's another free way you can watch stuff. And then also just a optional supporter tier here just to support the channel. Think of it like a tip jar. And then, of course, there's the Discord. So, yeah, we were all kind of like coping together this morning with the market drop, as we kind of saw there with how red everything was. Good. Just love going back and forth with everybody on here in between videos. So that's where I kind of post all my trade alerts as well, too. So everyone got a heads up to my big changes that I did yesterday. And yeah, it's been nice and active lately. So it's been nice to just going back and forth with everybody and everyone just learning from each other and really being exposed to different ways of doing things, of living in your brokerage. So like, yeah, we're all doing things a little bit differently, so people can kind of really pick and choose what works for their situation, given that everyone's situation is different. So that's the video. If you appreciated all the transparency and everything that you're getting from the video and looking forward to see more, please give a like and subscribe. Hit the bell notification if you want to be notified about future videos. And I'll catch you in the next one. Peace.